Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. I've said repeatedly in my commentaries here that the most significant feature of this market in recent weeks has been and still is, even now, the very significant lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows in 24 in January, February, and with some mild finessing the lows of late July and early September, down in the 15,840 and 15,600 zone. And most recently in late October, November, and early December last year, and I suppose also congestion in January and now February this year. It is at this point that I feel obliged once again to mention the big descending scalp pattern that I have been going on about for months and months and months, and what it may mean within the near-term universe. So the key level has been and is the lows at 15,840. A significant move below this, and by that I mean you would know it when you see it, a significant break below this would give a downside potential for the descending scallop pattern of target X down in the 13,830 zone. Still all comes down to what the market has done and whether it has finished fondling that key 15,840 zone. As of last week, well, we hadn't. We were still doing that. As prices reached up towards and through it, finally being stopped by the overhead dark blue neckline currently at 15,870 of the late July to late November 2024 potential head and shoulders top pattern. However, if we take a few steps back, first, I suspect the crossover of the breached bright red May 2024 to date downtrend, currently at 15,050, down through the dark blue neckline, currently at 15,870, of the July to November 24 head and shoulders top pattern, back on the 13th of January, that may have finally started that move lower. The next issue is whether the November 2020 low at 14,935 will retain prices higher, as it did at the end of December last year and January this year. Well, last week it did, again, but the rise has been capped, and I suspect we may well see a fresh attempt on the downside, and at this November 2020 low. Finally, the one key feature left to discuss is the previously mentioned late July to mid-November 2024 head and shoulders pattern. I said on this pattern last time, and I quote, "I do not have great confidence in this pattern, as it is not only pretty scrappy as a pattern, but that it is also in the wrong place at the lows of the market. However, it is still a possibility, and I felt obliged to notify you of such a possible pattern, especially as the neckline is so close to the important 15,840 lows." End of quote. Today I view this pattern with a more, how shall I put it, more of a friendly eye, and thus I feel obliged to lay out some potential targets below. Thus a primary target X1 would be down in the 14,250 zone, with a secondary, harder to reach target X2 down in the 13,250 zone. LME 3-month zinc. Much like LME copper and LME aluminium, there are a number of patterns here that have made themselves known on this daily chart over the last few weeks. Some I've previously mentioned, some have recently appeared, and some, well, they became evident when I started looking at the longer term charts. I'll start with the patterns I've already highlighted, notably the broken and breached but still refusing to die, absolutely refusing to die, old dark blue upper time above, just above, and that's currently at 29.15, and middle time below, currently at 27.50 of the May to August 2023 bullish shift picture, that subsequently acted as an August 23 to April 24 upper bull channel. This one will not die, as in January the market played around the upper time, and in late January going into February the market played with the middle time, and I suppose still does, standing in between the two tines. I asked the question 18 weeks ago when prices were higher, whether, and I quote, "The question now is whether the market will falter here, much as it did in late May, or will it really go for the higher price?" End of quote. I'd added to this my words of 12 weeks ago when I said, and I quote, "Keep a careful watch on the 29.40 zone below and what may or may not happen." End of quote. In early to mid-November last year, we saw once again prices test down to the 29.40 zone and fight shy of fully pushing lower, But in January this year, they pushed lower despite a mid-January limited change of mind. It's a limited one at that. All this promoted by the bearish action of the small double top formed in late November and December last year. 2 weeks ago, prices moved down to also test another support, the purple highlighted lower time, currently at 28.35 of the somewhat newer February to August 2024 bullish shift pitchfork. I said last week, and I quote, "This was not a good support as only the middle time has seen any action until then, but it did erode the bearish potential of the move somewhat," end of quote. Such that we saw a combined key reversal up and bullish engulfing pattern up to that breached purple lower time. 2 weeks on and we are still riding around that breached purple lower time, such that my thinking on the strength of this support may need to be revised. One final feature, and perhaps this is the more significant of the new features, and that was all these moves back up and down gave me last week the opportunity to draw a new bright green late December 24 to mid-January 2025 bearish Andrews pitchfork, which at the time showed some promise in identifying the bearish angle of attack. However, this one has not proved to be the case, and as I said last week, and I quote, "I'd watch this bright green bearish Andrews pitchfork closely, even should it happen, even if it morphs into a less aggressive bearish shift pitchfork for the same move," end of quote. This one might just be the way we move lower now, so caution. And that's the end of the quote. Well, I've morphed it this week into a less aggressive bright green bearish shift pitchfork with the market just above the declining bright green middle time, currently at 2800. LME 3-month tin. There is one pattern on this daily chart which I've spoken about before, and possibly two, maybe three others that have developed since my last commentary. The pattern I spoke about before is and I quote, "bright red neckline, currently at 32,430 of the uneven August to November 2024 head and shoulders top." This bright red neckline is closely aligned with the long moving average, and I said about this long moving average 8 weeks ago, now 16 weeks ago. And I quote, "This is a key level, and it asks the question of this market whether it will bounce up from it as it did in late July and early August, as well as to a certain extent back in early September, or will it break it and test the late July base congestion between roughly 28,835 to 29,005. There is a lot of overhang in this market, so if it does break, then it may reach down to the previously mentioned neckline extension for the October 23 to January 24 reverse head and shoulders bottom," end of quote. Now, I ended 13 weeks ago, and I quote, "Since that time, that is just about what the market has done." I said the following 5 weeks ago, which is now 13 weeks ago, when I was actually forming my commentary at the time, and I quote, "Prices broke down through it with vehemence, punching down not only through the gold long moving average, but also the July 23 high at 30,205 and the next congestion at 29,880. This move lower has prompted me to look at the whole August to date action as a possible head and shoulders top pattern with a neckline that is just below the gold long moving average. Now, this move lower, being just today, is not as yet confirmed, but because of the size of the break lower, I feel obliged to at least give some potentials for any move below the proposed head and shoulders top pattern. Thus, a primary potential be down in the 29,030 zone, with a secondary, harder to reach potential down in the 27,170 zone, end of quote. By mid-November last year, prices had reached what had transformed from a potential to a primary target, and by the end of November last year, reached down to 27,200. Within $30 of the harder to achieve secondary target, enough for me to call it achieved. We've since then had a reactionary moves back up and down, caused I suspect by the bow tie formation in the moving averages at the start of December last year, and capped for a while by the mauve medium moving average, currently at 30,470, and this week by the higher flatlining gold long moving average, currently at 31,285. This move up over the mauve medium moving average and to the higher gold long moving average have created an interesting pattern that I detailed last week, and I quote, These moves since November to now have created a new pattern and a possible ascending triangle, come ascending wedge pattern, capped by the dark green upper trend line, currently at 29,965. We are far enough along this pattern that next time I will start looking at potentials both for breaks above and below. End of quote. Well, we have moved on even further since then and had a break upwards out of the possible ascending triangle, come ascending wedge pattern. Through the topside gold long moving average was not allowed true stabilization above, and we might still have this as a false break higher. Nevertheless, it is enough that I've labelled a primary target, potential target X topside in the 33,150 zone or area, and a secondary harder to reach potential topside target X1 in the 34,050 zone or area. Now, additional to this, I had the opportunity whilst looking at the longer term charts to draw a November 23 to November 24 bullish shift pitch fork. And it is the lower tine of this bullish shift pitch fork, highlighted in purple on my daily chart and currently at 29,685, that though not fully tested has added further support below the market. Furthermore, below this we have the old neckline currently at 29,275, breached many times in November, December 2023 and January 2024. Still managed to erode the bearish perspective incentive on those. I'd only add that a little below these we also have the 28,835 to 29,005 congestion zone area. A breach zone, but useful still as an eroding agent.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.